Hey everybody, it's Pete. Good morning. In today's video, we're going to see if we could find some stock picks as the market continues to slice lower. Both Bitcoin markets, all the crypto markets right now, as well as the stock market penetrated some really big levels last week. And things got a little scary for those of you that are trading without a stop loss right now. We've been talking quite a bit that especially even in perfect conditions, you should be using a stop loss. But now that the tape has changed, we've been talking about the Federal Reserve and the changes in interest rates probably for the last 3 months. This week is a new FOMC meeting, and we're going to talk about whether or not the recent selling is ahead of the news of the announcement that's coming on Wednesday. And I'm going to show you what I mean. We're going to go into the swing trade newsletter. I'm going to give you a little bit of a deep dive into how I created my game plan for swing trading this week. And if you want to follow it, I'm going to give you the link for that as well. So we got a lot to talk about today. We're also going to talk about Netflix. We had a couple of people asking about Netflix after the big collapse after earnings last week. But we do have a decent list of stocks we're going to look to buy today. And believe it or not, some short selling opportunities. Some of them are still in play, for lack of a better way of putting it. There's quite a few short sales that are well beyond what we call the optimal entry. We wouldn't be looking to initiate a new trade. So what we're going to be talking about today is how to be buying stocks this week, which is really more important than which stocks to be buying this week, because you really need to be agile this week where the tape has clearly changed. We penetrated some big levels to the downside. Buying stocks this week really means that you have to understand how to work your position. So we have a lot to talk about. So stick around. We'll be back in just 1 second. Okay, so the very first thing I want to do is we're going to talk about Netflix first, because we had quite a few questions about Netflix in our swing trade review session last night. And I want to use Netflix as the harbinger of exactly the mindset that we should have looking to be buying stocks this week. And then I'm going to walk you through the swing trade newsletter that I put out just for today. I'll show you today's version. Plus, we have a lot of earnings this week. So we're actually going to start out taking a look at Netflix, because I think it's a perfect scenario to be talking about how to manage today's trading ideas, how to handle what we should be looking at into the week. And it really comes down to this, okay? The stock was down $110 on last week on Friday, also had follow through today. So how does that translate into what we're doing today? We had a couple of people last night we have a swing trades review session and game plan for the coming week every Sunday night in our private community. And a couple of people asked last night, is now a good time to be buying Netflix? And the answer is no. Absolutely, positively, no. Not as a swing trade. If you're looking to buy Netflix stock right now, personally, I'm looking for opportunities intraday simply because of the volatility. But from a swing trading perspective right now, that is the literal definition of bottom picking. It had bad guidance, bad subscriber numbers, and the market punished it for that report. Okay. If you are looking to be a buyer of Netflix right now, you're guessing, you're gambling, and that's just simply not trading. Now, here's the biggest thing I want to get across. Even if you buy Netflix today as a swing trade and the stock goes higher, that still does not make it a good idea. It means you guessed, you gambled, and you took a chance, and that's not good trading. The reason we decide to put on new shares, the reason we decide to buy stock, whether it's a day trade or a swing trade, is simply because there's a really good chance of that stock moving in the direction that we believe it will go in exchange for taking that risk for that trade. This right now is getting pounded. It's going down even further. If this stock should happen to rally, that still does not make it a good buy. There's a stock that goes up versus a stock that's a really good, repeatable situation that will make your account grow. So I just wanted to start out this week because of the way the market's getting pounded a little bit. So I'm going to walk you now over into my thought process for this coming week. We're going to go through some opportunities of stocks to buy this week, but I think it's a little bit more important for you to get the mindset of what I'm thinking this week, which is kind of talking about what's going on with the Fed here as well. So we're going to make this a little bit bigger so you can see it. By the way, if you want to follow along with this for me and make a copy of this for yourself, I do this every day for our community. I'm showing you what the Monday thought process is. There's a link in the description for this newsletter, and I'll leave it here posted, even if you're watching this video a little bit later, because understanding how and when to buy swing trades, especially, it's kind of fun. So you can click the link in the description if you want to follow it with me. So again, it's time to short the rallies. This was a big conversation that we had last week. If we're looking at the market, the bigger picture of the market, we know that the S&P 500 and the 200 period moving average is the level that pretty much everybody was watching last week. 452 also was the level that we were watching. Now, what is the big saving grace? What is the big thing that buyers of stocks this week is leaning on? This is really where you separate yourself from just looking at charts and building arguments. We actually were talking about that already in our Discord community early this morning. Hanish brought up a couple of good points, and I'm going to show you exactly what that main point is from Friday, and that was this massive explosion in volume after we pushed down now 1, 2, 3, 4, 5, 6 days in a row. That is what we call exhaustion. So I just want to get across on that when you spot exhaustion in a chart, it's usually a fast parabolic move in the direction of the most recent momentum. And you see a massive, in this case, red candlestick. On the other side, it'd be a massive green candlestick, also with larger volume. So let's just say, for argument's sake, we were going higher and we saw one of these exhaustion candlesticks. That doesn't necessarily mean you just hit the road and get out of the trade. It means that something changed in the order flow. And now you need to be a little bit more sitting up in your seat and a little bit more aggressive in your decision-making about the potentiality that the reason it was going up just exhausted itself. So I want to walk you through how this actually happens. So we'll pull the chart up again, and you can see the selling, right? Selling, right? Selling on the way down. And then you get this giant spike. Now, this is happening in the futures, but in the S&P ETF, but it happens the same in stocks. So let's just say, for argument's sake, let's use Kelly as an example. Let's say Kelly Irwin is a giant hedge fund, and Kelly's, in this case, selling stock, but let's use buying stock as an example. And let's say that John Lash is working on the floor of the New York Stock Exchange, or is another hedge fund. And so Kelly calls up John and says, look, I've been buying this stock XYZ for the last 2 weeks. I have 500,000 shares left over. If you can give me a good print on the balance, I'll give you the rest of it, because every time I slow down, the stock starts to go down. So I'm obviously the person who's pushing it up. So Kelly calls up John. John says, okay, great. I'll give you XYZ print on this, and we'll be done with the order. And that's why you see a big move to the upside, but in this case to the downside. But we're going to use the upside because it's easier. Buying. All of a sudden, the two of them get together on a call. That big print happens, and it's called exhaustion. So that's literally the end of it. Some people call it a cleanup print. Some people call it capitulation. We've called it exhaustion because it's exhausting the buying or exhausting the selling. So with that in mind, and if you can see this here on the SPY, that's pretty much what we have after these 3 weeks of selling. Now, does that mean you just go in and start buying? No, because generally what happens is we will tell people, okay, if it's going up and you see exhaustion, now move up your trailing stop loss a little bit more aggressively because something changed. When the conditions changed, your trading management changes. So in our terminology inside the boot camp, we'd probably be talking about switching from a trend trading profit maximizer to a momentum profit maximizer. And we'd be moving up a little bit more aggressively, looking for, if it pulls back, getting out with a little bit tighter trailing stop loss. So I wanted to first describe what's going on in the market and what happened on Friday and why that volume spike was so significant. We're not looking to go in there and just start buying, but something changed after 3 weeks of buying. And 3 weeks of selling. What do you think it is that changed? And we're actually going to talk about that right now. We're going to dive a little bit deeper into the newsletter here again. Okay. The bulls have lost control. Tech stocks are reeling from the specter of higher interest rates. And we've been talking about that for the better part of a month, which is kind of an important thing here as well. Every single day, what I try and do is I try and help you put the pieces together to build arguments for why you should accept risk, why you should be buying stock, why you should potentially be looking at areas to book profits or maybe move up trailing stops. This is really where you get the most value out of watching these videos, is because Monday through Friday, I'm giving you the thought process of what professional traders think and how to work those positions, when to be aggressive, when to scale back, when to have more position size, when to have more positions, all of those kind of things. So I'm going to walk you through what I'm thinking and how it happens. But more importantly, I just want to ask you, if you find these kind of insights valuable, please do me a favor, smash that like button and hit subscribe, because you'll get updates. We actually have a new educational video coming out today, actually. So if you get value, do me a favor, please hit that subscribe button and the thumbs up button. So here's the big thing. All right. Is it baked in? That's what we're going to talk about here. The FOMC speaks this week. Volatility is here. It's going to be fun if you're prepared and agile. So let's actually touch on that. I'm giving you some insights into what's going on in our private community right now. We get a lot of new members, especially over the last 2 weeks, coming in because they're scared. They're coming into the boot camp because they don't know how to make decisions yet. Buying and holding just because you believe the market's going up every day kind of works when quantitative easing is under the market and it's pushing things hard, but quantitative easing is going down, interest rates are going up. The Fed's going to talk about that this week, so that vicious bid under the market, holding the bid up, is gone. So now we get a lot, again, as it should be. If you're not sure about how to make these decisions, you need to come in and learn how to make good decisions. And that's what we just talked about there, prepared and agile. So if you take nothing out of what we talk about today, every single thing that I teach and what I want to give to you is, if this happens, then I plan to do this. Now, if this happens means you have a strategy and you understand what you're looking at, right? We're going to break that down a little bit more. If this happens, then I plan to do this. It's that second part, just like Mr. Miyagi there. It's that second part, watch the fence, that most people have problems with, is they don't take action on what they planned to do. They get frozen and then they tell me I'm stuck in a position. I don't want that to happen to you. Again, everything we do here is for educational purposes, but I want to walk you through what it takes to see your account go higher and higher and higher, or even flatter in a tough market and then up when we get some better opportunities. And it really comes down to first understanding what you're looking at. And we call that stacking the order flow, and then understanding how to manage what happens after entry and exit. So what happens between entry and exit. So remember, chart reading is the first part of it, but chart reading is not trading. What we're talking about now is elevating the way you think and deciding which stocks to buy, because you understand that trading is the decision after you look at the charts. Okay, so we're going to keep going deeper right now. If you're prepared and agile. So again, earnings are really big this week. In case you don't have any of these kind of sheets, this is the one that we provide, the research sheet that we provide for members of our community. We give them every day what's coming out. So you need to have this list as well. So when we give out our ideas at the end of the day and we start to break down in the Discord community, the very first thing that I make sure that everybody's aware of is this. Check your earnings before putting a stock in your game plan. You need to know when earnings are coming out and whether or not you want to trade that stock. So for example, IBM today, right? Are you trading IBM into earnings? IBM had a big downgrade last week. Prior to that, the stock was one of the strongest stocks on Wall Street. This was amazing. And then we got, if you're a regular viewer of the channel, we had 10 days of indecision, and now it's pulling back with the rest of the market. So there's really, for me right now, there's nothing to do in IBM. But the point that I want to get across, again, is this. Prepared means you also know what earnings are coming out. So remember, keep that in mind, prepared and agile. All right, so let's continue with the spreadsheet. I want to walk you through everything that's in my thought process. So IBM and Halliburton scheduled report today. IBM is one of the strongest before a big downgrade. Now, moving on into the market. So if you know everything that we do, we have the stock market power pyramid. There's the bottom of the pyramid, which is the big foundation, the NASDAQ, the S&P 500, and the Dow. You go above that to sectors, go above that to industry groups, and then above that to individual stocks. Because the sector rotation right now has really gotten crushed, we're working our way all the way up to the top of that power pyramid, and the foundation is not really as bullish as it was. So what does that mean? How does that translate into ideas, and how does that affect when you buy stocks? Well, if we're working our way all the way up to the top of the pyramid and we don't have the industry groups, we don't have the sectors, and we don't have the market going in the same direction of the stocks we're looking to buy, then you got to really be on top of working your position. And that's more part of agile. So the question means, what does that mean to work positions? Well, if you like ideas, and I'm going to point a few out of them in a couple of minutes, that means that if you normally would go in with 1,000 shares, right now, I'd probably be going in with 300, looking for a little bit of feedback. And I'm actually going to show you two trades that I did exactly that on Friday. Both trades lost money, but they were good ideas. The market just rolled over again. So I want to be clear. Every trade I make doesn't make money, but the key is keeping losses reasonable, and then 1 or 2 trades line up, and that makes your entire week. And that's the real, honestly, that's the real math, the real trading. It drives me crazy when my win percentage is blah, 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 blah. Who gives a crap about your win percentage? I could lose on 70% of the trades and still be profitable, as long as I keep my losses to what they're supposed to, have the right size, and maintain a good winning trade. So I'm going to show you those 2 trades in a second, but let's get back to what we're talking about over here. So the S&P 500 sliced below critical key level, the 200 period moving average, which is pretty much the big level that everybody was looking for bids. Now, it's not a coincidence that we sliced through that level on exhaustion. So it's going to be interesting to see if we get a lower opening down and a rally. And if you remember last week, that was actually the game plan that we were calling out for everybody. We were looking for a lower opening. We were looking for buyers to step in and then a rally, and we actually got it. And that's actually where I put those trades on. I'm actually going to give you those two trades. So if you remember on Friday morning, I walked you through the exact game plan of everything that I do prior to the market opening and prior to having stocks. You need to have the guts and confidence in yourself to say, look, I know what the heck I'm looking at. Now I just need to put a game plan together and script. If this happens, then I plan to do this. So I'm going to walk you through what happened Friday morning. The two trades I lost money on that both started out profitable, but they did exactly what I expected. It's just the market rolled over and we took the acceptable loss. So if you remember on Friday morning, we said we were looking for the market to open lower, push down, find support around that 200 period moving average of where it was on Friday, and then look to start looking for spots to buy. So we bought some day trades, we bought some swing trades, and everything unfolded perfectly. So this is what I want to get across to you in a really big way, and I really hope you take this to heart. You can have losing trades. It's not a question of the trades in the math, right? Where struggling traders, smart struggling traders don't get to the other side is you let your ego get in the way of trades that aren't working out and you hold them too long, and you haven't developed the skill of understanding how to hold the winning trades longer so that you really are only getting to the point where you can make 10 trades, be like, okay, that trade made a little, that trade lost a little, that trade made a little, that trade lost a little. Oh, that one didn't come back. And I keep adding to that one, and that's the profitable one. Then you go to the next trade, and you make 10 trades, and only 2 of those trades were massively profitable. The other 8 kind of washed each other out. That's a big mental hurdle that a lot of traders can't get beyond. And I'm telling you, as a professional, that's the kind of thought process you need to have. Stop saying, oh, the system doesn't work. It's not the system that doesn't work on a trade-by-trade basis. No system should work on every trade. It's not. The very definition of edge means over time. So I'm building all of this up because I want to give you the confidence to understand that even if you have some losing trades, it doesn't mean the strategy doesn't work. It doesn't mean that you're not a good trader. It means that that's one of the trades within the edge. Edge literally means sample size. It will happen most of the time. So I'm going to walk you through those 2 trades right now because I think this is important heading into the week to really think like a trader, okay? So here's what we expected. Here's the 200 period moving average on Friday. It pushed down and we found some buyers, and that's exactly what happened. So we had Citigroup on Friday. You can see exactly the same type price action. And we had Wells Fargo, same exact type price action. It pushed down and then eventually broke out to the upside. Now you'd be like, all right, so why those stocks? Well, both of them reported earnings, and the earnings were actually pretty good. So this is the difference between bottom fishing and going in and buying stocks that have a good catalyst that is showing relative strength. Both of those stocks were relatively strong. Both of them had good earnings. The market opened lower, did exactly what we expected it to do. So we followed our plan and bought the stocks. They were both profitable until the market and the selling took over, and we just took the initial loss that we said. So a couple of trades that didn't follow through, no big deal. Then we just look for the next ideas. I wanted to show you 2 trades from last week that did not work out, that were swing trades. We got a little bit more aggressive on the day trades because they kind of unfolded exactly the way we expected. Morgan Stanley was actually one of the more aggressive trades that we actually had in this window right here, which is actually something I want to point out as well. So you can see what happened here after Morgan Stanley reported earnings. Then this day here was vicious to the upside. Really, really good day trading opportunity. So coming in, let me make that a little bit bigger for you. Then coming into Friday, we said, okay, Morgan Stanley was one of the stronger stocks out there. If the market does exactly what we expect it to do on Monday, we're looking for it to push down, and then we're going to look to bid into Morgan Stanley. So what actually ended up happening is the market pushed down. Morgan Stanley ended up having a bottoming tail here, and then you can see 96.50 to 99.50. Okay, now I want to walk you through what this means as a professional trader. And again, I'm not saying you have to quit your job, but you have to think like a professional trader because look, let's face it, you're putting your money against algorithms. You're putting your money against some of the smartest people in the world. You need to think at a higher level. You need to stop thinking that being a chart reader is how you're going to make money. That's not how you make money. Chart reading is what you're looking at. Trading is how you make money. There's a separation between the two. And the sooner you admit that, the easier it's going to be for you to get to the other side. So the point that I want to make about this Morgan Stanley trade. So we talked about the Citigroup trade that didn't make money. That was a swing trade that rolled over at the end of the day. The Wells Fargo trade rolled over at the end of the day. But this Morgan Stanley, which was only a day trade for us as it unfolded, because it was a day trade, because of the situation was different. As a day trade, you can go in with a little bit more share size because you're managing it on those little tighter day trading parameters. So we had a $3 rally off the low with heavier share size. So that one day trade almost compensated for the entire week and turned the week positive because of that one trade. That's real trading. Small win, small loss, small win, small loss, maybe a little bit bigger win, reasonable loss. One trade follows through and it makes your entire week. I'm telling you, these are the secrets. And again, I hate to use that word secret, but these are the secrets that most traders never get to because you're constantly saying that trade didn't make money, therefore the system stinks. An edge is over time. So I'm literally walking you through just 3 trades from Friday and how it turned out to be a pretty good day, simply in the beginning of the day where the swing trades didn't work out, but the trade at the beginning of the day made the entire day because of the type of trade, the objective and the share size and the follow through. But more importantly, if you go back to what we're talking about over here, which is what I want to pull up right here, prepared and agile. Prepared means you know what you're going to do before the market opens. Agile means that if it does follow through, you do exactly what you were looking to do. If it doesn't follow through, then you simply pull the plug like I just talked about. All right. So we just talked about the exhaustion on the S&P 500. We don't want to call a bottom. Very, very clear, right? But we want to keep going forward. That's simply not smart trading. It's gambling and guessing. And I'm talking about you, Netflix, right? Stock futures are down. Bitcoin started the week with heavy selling, and Mara is already down 9% in early trading and is teetering on 20 support. So let's actually hop on over to Bitcoin and take a look at that right now. We're actually going to use the continuous contract on the daily chart just because it's a little bit easier. It's the contract. It's the full contract. So we're actually down almost 5,000 right now in Bitcoin overnight. This is the big level. And I got to be honest with you, it's not as significant as the $42,000 level that we were looking to hold. 30 is the next level. So what does that mean? It means I'm still not looking to buy Bitcoin until I see the stock go, until I see it go well bid. I want to see this. I'm not looking to bid into something that's getting crushed. Somebody just mentioned Kohl's before. We actually pulled that one up. Kohl's has been in and out of the news. We've been trading it. We called this out actually last week, where if you remember, we said vicious move to the upside, vicious move to the upside. Then the news came out, and now the stock is actually, it was actually up much more than that. It was up much higher earlier. I want to say it was up closer to 40%, if I'm not mistaken. So it's actually pulling back a little bit, but now it's all the way up here. So this is a different scenario. There's a news story out on Kohl's, very similar to, if you remember last weekend, there was a news story coming out of Macau, which affected regulations and taxation for MGM, LVS, and Wynn. So we said we were definitely looking at those. As a matter of fact, LVS is one of the stocks in my game plan to buy today because it's holding the bid. So Kohl's, if you're choosing to trade it today, which is already up over $14, it's not an order flow trade. It's not really even a chart reading trade, because if you look at this, it's very hard right now to say that there's an edge in the order flow. As a matter of fact, it's been sideways for the better part of 6 months. So right now you're just trading the catalyst. So what does that catalyst mean for trading Kohl's this week? How do you use order flow and tape reading to buy Kohl's stock today and this week? Well, what I'm going to be leaning on is Monday's opening price. As long as, let's say the market opens up, let's use the price that it's at right now. Let's just say $61, just to keep the number simple. You can see it on the bottom left over here. Let's say that it opens up at $61 and bam, the market opens. I will now be using, and let me actually pull that into the screen right there. So let's just say, for argument's sake, that's where it opens up. Give you the exact number, kind of like right there. Let's just say that's $61. So what I'm looking for in Kohl's right now, trading this off the catalyst, because it has to go down to the short-term time frame. There's no bigger picture order flow. Where it opens up today on Monday, that opening price is going to be how I read the tape. As long as it's above that opening price, we can kind of hang on to that trade all week, quite honestly. If it opens here and punches below that with that catalyst, I'm leaving it alone because it no longer meets the criteria of why I'm looking at the stock in the first place. The buyers are not holding the bid, so it pushed down. If it opens above and stays there, I'll stay long. If it opens below, I'm leaving it alone, and then I'll set an alert at that same level. And I'm just using 61. It might open up at a different place. So that's what I mean, agile and prepared, that we talked about before. So that's the game plan for Kohl's this morning. So that was actually pretty good. Okay, so that's Kohl's. Maristock is clocked. It was at 84 earlier in the year, and now you can see it's resting. Actually, it broke through 19, broke through 20. So this move to the downside is coinciding with this move in Bitcoin. So as of right now, there's nothing for me to do. If nothing else, I might even be looking to short sell it if it's available. But this is the big thing. This is a part of being agile, right? These extreme conditions, when everything seems catastrophic, typically leads us to the best new entries. We'll need to be nimble. This is the key right here, everybody. Work the positions. I'm actually going to make that in bold. Work the positions, but I'm looking to be a buyer this week. That's my anticipation for this week. Now, here's really why. I'm going to get into that. This is the picture of what happened in the market. And again, if you just happen to join us on the call right now, the link for this sheet is actually in the description, or if you're watching the video later, you can grab this link as well. This is just on Monday. I do this for our community all week. So this is what's going on in relative performance for the week. All right. This is the big thing here. When the markets get hammered the 2 weeks leading into an FOMC announcement, which is on Wednesday, the news looks like it's baked in. We could very well see a relief rally this week, but it will be a momentum trade long meaning we're being a buyer looking for a new short sale after it rallies. The SPY ETF needs to reclaim the 50-period moving average for me to get long with conviction. So what am I talking about here? I'm mapping out the entire week before the week starts. If this happens, I'm going to be a buyer. If this happens, I'm going to be looking for a short sale. If it gets up to this level, I'm going to reevaluate, and then I'll be looking a little bit more aggressive. After 2 weeks of selling, 3 weeks of selling, heading into what's expected to be a bearish Fed announcement, is this 3 weeks of selling already baked into the price the last 3 weeks? And will we see a relief rally after the announcement on Wednesday? So Wednesday and Thursday, hard after that. That's all of the things that professional traders think about, and that's what I want to walk you through to understand how to do that. So now if we go back over to the charts and take a look at what that means, we now need to put the 50-period moving average back on the screen, which now seems like it's a mile away. So the price action that we just mapped out in this story right here is, if based on the Fed expecting to announce higher interest rates, which is it's a foregone conclusion. It's not if, it's how soon and how often. Is that already priced in? So you heard buy the rumor, sell the news. In this case here, the news has already been baked into it. So if the news comes out of what's expected, we could very well see a short-term momentum rally, which means we're looking for well-bid candlesticks, higher highs, higher lows after the exhaustion that we just saw. So we are going to remain in a bearish mindset unless we start to see daily candlesticks go well bid, which is higher highs and higher lows. After the FOMC announced, we're looking for a rally up to the 50-period moving average, which would ultimately end up being a lower high. And that would be the target of a new long after that announcement. So you see how we're scripting the whole thing out. And the big thing we want to talk about is, well, am I coming up with that number out of my head? No, that's really what we're looking at. We're making lower highs after we made new all-time highs. If this exhaustion holds, if the Fed announces, if the market interprets that as, okay, they did what they said, let's actually take a little bit of a breather on the selling, this rally here, 1, 2, maybe 3 days up to this level in the 464 area be where I'd be looking to scale out up into that level. That's how professional traders map out the week. And I want to inspire you to understand and just do a little bit extra work than you might be doing right now to say, if this happens, then I know exactly what I'm doing. If this doesn't happen, I'm just going to step back and not put my money in harm's way. That's how you gain maximum conviction in your trading, because you're mapping this out well before it happens. Okay. So let's actually work on over to here and just work on over into the sector rotation. So you can see the rotation for the week. Nothing over the last 5 days looks good. One pocket of opportunity over here is energy, which those are most of the stocks that are going to be in the game plan today. They're still maintaining the bid. So what I want to do now is I just want to go over some ideas that I'm looking and will be in my game plan for this today, specifically, both on the long side of things and on the short side of things, but mostly looking at stuff I'm looking to be a buyer of today. So we know ATVI has the story with the Microsoft buyout, but we're looking actually at Electronic Arts that has now rallied since the lows in December. kind of holding the bid here and paused a little bit here around 140. So I'm looking for this above 140 and up towards 150 will end up being the next level. PGR, Progressive, actually a really good clean bull flag, and you can see all the clean pushes and pauses here. But what did this stock do? And this is actually a pretty cool lesson that you can take out of this right now. What did the market do last week, the last 3 days? Got absolutely hammered. What did this stock do over the last 3 days? Didn't go down. So this stock is showing relative strength. So this stock is going to be one of the stocks in my list early today to look for buyers to step back up if the market bottoms out, and this will be one that I'm looking to bid. Now, remember we said agile and prepared. If I'm looking to buy this stock and it doesn't go up, doesn't have buyers step back in, I'm just going to leave it alone. I'm not going to say I have to buy it because it was in my game plan. It was in my game plan because I was looking for buyers to step back up. If buyers step back up and the relative strength holds, then I'll be looking to initiate a trade. Okay, so those are the top two that I'm going to be looking at. Other stocks that I'm looking at as well, some stocks that are showing relative strength. CF is actually a pretty interesting one. You can see it's got this downtrend here, but look at this massive spike in volume on what we call a bullish U-turn, opening up a little bit lower today. But what I'm looking to do is initiate the first piece and then looking for this trend to reverse back to the upside. We also mentioned LVS. LVS had the news story last week, bullish gap, a little bit lower today, but maintained the bullish move. It did not roll over with the rest of the market. So we're looking for that catalyst to come back. Some other ideas that I have on my game plan, ExxonMobil, again, energy stocks, really good, clean bull flag right now. Philip Morris is another one that we mentioned. CVX is another one. And Procter & Gamble is another one. Procter & Gamble needs to get above 164. You can actually see this on the hourly chart a little bit cleaner. Kept hitting 164 and pulling back. Maybe you could even make an argument for 165. So it's got to get above that level before it's going to have my attention. There's no reason to get in there and fight it. There are some stocks on the short side that are setting up as well, but we're going to stay away from most of those right now. A couple of them that are pretty interesting. Net has now pushed down, paused. Friday was the optimal entry. You can see it's actually heading down even further. Next level of support is kind of down here in the 68 level. Plenty of room to go on the short side. Penn as well. We want to take a look at some other stocks on the long side, just in case. We want to make sure we have some ideas. INSEE is another one. INSEE is in my radar. You can actually see, again, it did not pull back with the rest of the market last week. Held this level here at around 65, pushed up, went sideways, pulled back a little bit, but now it's maintaining the bid right at a key level here as well. And I think more importantly, has some room to go all the way up here. Maybe a little bit of short-term resistance. Sellers came in once, twice right here. If we can get through 77, then I'm looking at around the 88 level to the upside. So those are some of the bigger ideas that I'm looking for today. But I think, honestly, one of the biggest things that I can get across to you today, whether it's Bitcoin, Netflix, or anything that's getting hit today, if we're looking to buy, being nimble with position size, the smart trading right now is, especially if you're looking at some stocks that were strong but pulled back, is to still dip your toes in, which is smart trading. You'll find that in every long historical trading book, is that working your way into swing trade positions is the smarter way, because you have a much bigger cycle for how long you hold that trade. You want a little bit more feedback, and you really want to have some confirmation that price is moving in your favor before you start to scale into that position. A little bit different from day trading. Day trading, you're on those much tighter windows, and you can manage the share size and position like I showed you in that Morgan Stanley trade. So there's a lot going on. If you want to have this spreadsheet, there's a whole bunch more stuff on here. You can clearly see here that there's a breakdown of some more ideas that I'm looking at today. If you want to get some new ones, the financial stocks that we just talked about before, these are some of the ideas that I'm looking at on the long side today. Caterpillar, I'm actually looking to see this support today. You can see the breakdown in Bitcoin here as well. And Peloton, I'm actually looking to see Peloton continue to trade lower here as well. So click the link below the video. You'll get that newsletter. It's only Monday's edition. I wanted you to see what it takes to really be prepared. And I wanted to spend the entire day today talking to you about the right mindset. Please do yourself a favor. These kind of extreme conditions with massive volume spikes after a big move, they could lead to some of the best buying opportunities where a week from now we might be like, oh my gosh, why didn't we buy more down there? Well, it's a pretty bearish situation right now. So if we start to dip our toes in, it should be, if you want 1,000, go in with 300, work that position. If it rolls over, you're still going to be managing a very small loss. If it does catch a bid, the next push and the next pause, that's where I'll be looking to start adding to those positions. So be smart with your position size, especially this week. And what's going to be fun to watch together as a community is whether or not that analysis that we did on the interest rates and the Fed, and whether or not the 3 weeks of selling, as we put in here, I just want to show you exactly where it is that 3 weeks of selling already baked in? In other words, is the selling factoring in today, Wednesday's Fed announcement? And will we see a relief rally because the news is out, and do we spike back to the upside? So this is going to be a lot of fun to watch the market this week. Volatility is amazing right now if you're prepared. So remember, you really need to start working. If this happens, then I plan to do this. If this happens, then I plan to do this. That's the easy part. The tough part is actually doing what you said. And if you say, if this happens and this does not happen, it's imperative that you take a step back and say, okay, what I was looking for didn't happen, and I'm okay with doing nothing because what I wanted to see, I am not seeing unfolding. That's smart trading. That's how you start to elevate your game. All right. Thanks so much for joining me here, everybody. I really appreciate it. Do me a favor, hit that like button and hit the subscribe button. It would mean the world to me, and it'll also let me know that you're enjoying these videos. All right. Have an awesome day, everybody. I will speak to you soon, and looking forward to a good week of trading. Take care now.